All right, so in this video, I'm going to be answering the question, what actually happens when your term life insurance expires, right? Maybe you got term when you were younger, working, all that kind of stuff, whatever. Maybe you have it through work, whatever it is, whatever the reason is that you have term. Let's talk about what actually happens when it expires, when it ends, right? Well, basically what I'm going to do is I'm going to answer that question, and then I'm going to break down 3 different solutions or 3 options that you have once your term insurance expires, right? So I'm just going to go ahead and tell you guys, it's very, very simple what happens when your term insurance expires. The coverage goes away, right? The coverage that you have in place, like let's say it's 500,000, a million, 200,000, whatever it is, it's gone. It goes away. Whenever the term expires, it goes away, right? The way that term works is it terminates, it lasts for a certain period of time, 10, 20, 30 years. At the end of that term, the coverage goes away, right? Very, very simple. Now, you may be saying like, okay, that's terrible. What do I do now? Well, it's actually not that bad. I'll kind of explain your different options and what you can do after your term insurance expires. So there's 3 main options. I'm going to go through each of them. And the first 2 are like sometimes you can do these, and the last one you can do no matter what, right? So the first one is called renewable term, right? Some term insurance policies will have this written into the contract where you have the option to renew the term policy, right? So let's say you have the term policy for 30 years. If it's a renewable term, you may be able to renew the policy for another period of time. Usually it'll be 10 or 15 years, and the price will go up, right? The downside to this is whenever you renew the term, the price is going to be more expensive because now you're older, you may have more health conditions, different things like that. The price is going to go up, right? Because you're re-enrolling at an older age. The coverage can sometimes also go down. So maybe you had 500,000, now you only have 50 when you renew the term. And it could be more expensive, right? So with renewable term, that's one thing to consider. The other thing is that when you renew it, you are renewing a term policy, meaning you're going to run into the same issue again where it expires, right? So renewable term, it's only an option for certain people. It also is usually more expensive than the other options I'm going to be talking about. And oftentimes you'll pay more than you're currently paying, and your coverage could potentially go down. So I'm not a huge fan of this. Some people choose to do it. I personally don't recommend it, right? The second option is actually converting your policy, your term policy, into a whole life policy. This is another thing where it has to be written into the contract for you to even have this option. Some policies do, some policies don't. You'll have to check the fine print on yours. And basically what happens is your term policy turns into a whole life policy. The coverage is going to drop. The price is usually going to go up, and you'll have that rate locked in, right? The downside with this is oftentimes the rates aren't super competitive, so you're not always going to get the best rate when you convert your term policy to a whole life, because basically like all of the different carriers out there offer different rates to different people based off of their age, their health, different things like that. So like company A may be perfect for Johnny, but company B may be perfect for Jimmy, right? It just depends on each person and their individual situation. So when you convert your whole life or your term policy to whole life, oftentimes you're just getting stuck with a rate that may not be the best thing you can get. So that's the downside. The rates usually are not as competitive as other products. And then also the pro is you actually don't have to do any health questions. So if you just convert your term policy into whole life, obviously you have to have the option to do it with your particular policy, but they're not going to ask you any health questions when you convert that, or at least they shouldn't. Now, the last option is what I recommend for most people in retirement, to be completely honest with you, and this is basically getting a whole life policy, right? So when the term ends, that's the policy that usually, like most people will use that when they're younger, and the reason why is because when you're younger, in your 30s, 40s, sometimes even 50s, maybe even 20s, you have a family, you have this high income, you're working, all these different things, and you have a lifestyle to support, right? But there's usually two spouses, right? Husband and a wife, whatever situation, and then they have kids. If something happens to the husband, now all of a sudden the wife has to support both of the kids. So the term policy replaces the income. Now, when we get into retirement, we don't really have all of these expenses and all of these things that we're doing, so we usually don't need a term policy, right? You're going to have other needs, right? Like paying for your funeral, leaving an inheritance behind, paying for any final expenses, things like that, right? And that's why most people will usually get a whole life policy in retirement, right? Because the nice thing about this is the premium is going to stay forever. It's never going to expire, so you're not going to have to deal with this expiration with term, and it's going to last your whole entire life, right? And the nice thing as well is, like, regardless of your health condition, you're going to be able to find a policy, right? There's policies that will accept anybody regardless of their health, and obviously the goal is to get a day one benefit, but some people can't, right? But if you get a whole life policy, this personally, like, again, this is my recommendation. If you're in retirement and your term policy is expiring, is get something locked in while you still can. Lock in a low price, get a good amount of coverage, and just find something that's going to be guaranteed, right? That's my recommendation for you whenever your term policy expires. So, ladies and gentlemen, again, just to recap, whenever your term policy expires, the coverage goes away. You have three options: renewable term, convert your policy to a whole life, and just get a whole life policy, which, again, I circled it. This is my personal recommendation, right? So if you guys want to learn more about getting a whole life policy, finding the most amount of coverage you qualify for the lowest possible price, and getting something that's going to be locked in for your entire length of retirement and is guaranteed to pay out, you can go to Zusurance.com, and somebody from my team will be happy to help you with that. We work with all of the big companies like Mutual of Omaha, Aetna, AIG, all of those, and we can shop the market for you to find you the most amount of coverage for the lowest possible price you can get. We're going to be looking at these whole life options that last your entire life. So hopefully you got value from this video. If you did, leave a like, hit the subscribe button for more, and I will see you guys in the next one. Take care.